Hey, good morning. Let's go over today's trade plan. So we saw in Sunday's Globex session and Monday's shortened ES session that ES tested the 1890 high volume node and pretty much rejected and failed at that level. And from that point on, the market has been balancing in a range and really just consolidating the big gap up that we saw in the overnight session. At this point, heading into the open, we are going to be using the 77.5 to 79.5 as the micro bull bear zone. So that's going to help set the bias right off the open in the first 30 to 60 minutes. If we are holding below 77.5 to 79.5, then that would signal a relatively weak market, at least on the smaller time frames, and it can lead to a test of 70.75 to 72.75 and 65 to 67, which are still areas where buyers can be active on first test, but at pre-market support, we will have to determine whether we are seeing, a lot of weakness or whether there is still potential to reverse off that zone. So keep an eye on the NYSE tick. Keep an eye on the real-time momentum situation to see whether the market is really selling off on higher volume and wide range bars or whether it's really kind of struggling to go lower because the market could simply balance and consolidate the gains from that big gap up in Sunday's session and Monday's session. So we know that the price action on Friday was fairly bullish, and then we got a gap up on Sunday, so the buyers are more dominant and in control on the slightly larger time frame here. The 77.5 to 79.5 is really a smaller time frame bull bear zone where if we start holding above it, then it would signal and confirm that the buyers are in control. So in the first 30 to 60 minutes, the 77.5 to 79.5 area is really going to be important, and it is going to help us establish that directional bias. If we start holding above that zone, then we can go back up and test 85 to 87, 90 to 92, and with the main resistance being at 90 to 92. And since we have already tested the 1890 high volume node several times, if we are going back up on strong volume, on strong internals, and a lot of upside momentum, then we could even go beyond the initial resistance zone and test some of the upper resistance levels at 94, 95 half, even 98.75 to 1901.75, and potentially 1905 to 1906, where the sell side could start stepping in yet again. So above 05 to 06 and at 05 to 06, the risk reward will start favoring the sell side again, and it would be risky to go for those incremental gains beyond 1905 to 1906. So in the event that we do get upside continuation, 05 to 06 could be an area that caps the upside, or at least at that point the reward potential would not really be that great anymore for buyers. So that's an area where we could get some better profit taking. On the downside, 65, 67 is initial support, and in the event that we break below that, we can still get responsive buyers active at 54 to 56, and then we have stronger support at 45 quarter to 48 quarter, fairly high odds of reaction at that zone on first test, and in most scenarios that would be an automatic long setup unless it was happening in the last 30 to 45 minutes where you don't want to start taking fades. But as long as it's happening during the day, 45 quarter, 48 quarter is an area that can shut off the selling and result in a bigger bounce back up towards the 54 to 56 and potentially 65 to 67. So decent risk reward down there at the 45 quarter to 48 quarter zone. So overall, heading into the open, the short-term bias is going to be neutral, but leaning a little bit more bullish because of that gap up, and understanding that the market may simply consolidate some of these gains using 77.5 to 79.5 as the micro bull bear to establish our short-term directional bias. How the market reacts there will help us set the tone for the morning session. So those are our main ideas heading into the open. Since we are balancing in this bigger range, just be a little more cautious and selective with your trade location. If the market's chopping around and not providing a clear directional bias, then simply hold off. It's going to be better to wait on the sidelines for some better location or for some momentum to come in, some bias to really get established on those smaller time frames before stepping in. So if we're simply chopping and there's no clarity, then it's better to wait and allow for that clarity to come into the market, some directional bias, momentum to come into the market. But overall, we are still in a higher volume, higher volatility environment, so we can expect some decent setups today. So those are our main ideas heading into the open. Let's see how the market reacts to 77.5 to 79.5, and we'll take it from there.